ULTY, the YieldMax Ultra Option Income Strategy ETF, as well as MSTY, the YieldMax MSTR Option Income Strategy ETF, are both part of the YieldMax family. They are actively managed option income ETFs designed for high yield distributions. But their strategies, payout frequency, and ideal investor profiles differ. So in this video, let's dive right in. And we're going to start off with ULTY, which actually provides weekly distributions and is the main draw for this ETF. Now, ever since March of this year, 2025, they have switched from monthly to weekly distributions. And if we take a look at the all-time chart, we can see that when it was having its monthly distributions as well as a different strategy back then, it did not perform well at all. The NAV kept dropping and dropping, and a lot of people made fun of this ETF because of how terrible it was. But ever since March, when they changed their strategy, when they went weekly, the NAV has recovered ever since it pays out its distributions, which is a very good thing to see some stability in a weekly paying ETF. And if we take a look at the dividend history for ULTY, we can see March 13th was the first week of its weekly distributions, and we can see it's been averaging about 9 cents per share every single week, and it's done that for over 2 months now. And this comes out to a forward distribution rate of about 70 to 80%. So in just a year and a half, you can easily make your money back from its initial investment. And ULTY is continuing to pay out reliable dividends. As we can see, it's going to be 9.5 cents per share for the week of June 13th. The X date is June 12th with a payment date June 13th. And that is going to be a distribution rate of about 79% forward. And this is a very high distribution rate for a weekly paying ETF. If we take a look at some of the other ETFs that are paying out weekly distributions, the distribution rate is not as high compared to ULTY, and the other ETFs also have some significant NAV erosion. ULTY has been doing phenomenal in the past few months, and it's a great trending ETF ever since they moved the change from monthly distributions to weekly distributions, as well as investing in much better companies. Now, if we take a look at the holdings compared to some of the other YieldMax ETFs, this one actually holds shares of the underlying stocks that it sells options on. And we can see it has about 30 different tickers in this ETF, and it holds no more than 5% of each ticker. So this is a very diversified ETF, which is a great thing to have, considering that other ETFs such as TSLY or MSTY are single stock ETFs, and they hold a lot of risk and not much diversification. And prior to some of its initial downfall, it used to be a fully synthetic covered call strategy before they decided to hold shares, which also helps with the price stability. Now, even though MSTY is a single stock ETF, we can't count it out because it's a great ETF that pays out monthly and averages about $1.50 to $2 per share every single month. So it has a high distribution rate, even higher than ULTY, a forward distribution rate of about 90%. And if we take a look at the distribution history, it's done amazing in the past year that it's been out. Initially, it had some really big distribution payments, as we can see, $4, $3 per share, $2, but we can conservatively say that it's been paying over $1 per share, which is amazing. And the next time that this is going to pay out is actually going to be July 7th with an ex-dividend date of July 2nd. Now, if we take a look at the all-time chart of MSTY, we can see it's very different than ULTY if we compare the charts. It looks like ULTY has not been doing well, but I did buy some shares at the $6 price range, and it's made me a ton of money. So right now, around this price point is a great entry point. And then compared to MSTY, it's done great since inception. It's ran up to $43 per share and has had its dips and ups and downs. But overall, all time, if you got in at inception, you are up in share appreciation because this had an initial price of $20 per share. Now, if we compare the total returns of MSTY to ULTY, we can see year to date since 2025 of January, it has a total return MSTY of 25%. And this is with all of the distributions reinvested. And that is a huge total return considering that year to date, it's down almost 20% in share price, where it was about $27 per share at the start of the year. And it's very hard to believe that we are actually positive 25% considering this share price is down since 2025. And that is because of all of these distributions that we're receiving that have offset that severe decay in price. Now, if we're looking at ULTY, it's not doing good year to date. So for a lot of people who have bought ULTY early on, they have not made a great return. It's only up about 2% year to date. And it gets even worse when we look at the inception, since inception. ULTY is only about it's less than 1% total return if you bought in right when it's out, but it's a good thing that you're actually positive on your investment considering that the share price is down 69%. Now the data gets a little more interesting when we set the start date to March 13th, which is when ULTY switched from monthly to weekly distributions. We can compare it to the S&P 500, and both MSTY and ULTY have outperformed the S&P 500 by more than double %. And ULTY is actually up 20% total return since March 13th, which is just under 3 months from now. And part of the reason for that return is because it had some pretty stable price, stable NAV since March 13th. As we can see here, it was about $6.25 per share, and currently it's $6.26. So it really has been pretty stable, and a lot of people have really been enjoying this ETF, and people who have gotten in below $6 per share are sitting pretty. So both ULTY as well as MSTY are great ETFs to add to your portfolio. One strategy is not better than the other. They're two different strategies. One is a monthly payer, the other is a weekly payer. And this one is diversified with over 30 holdings, as well as holding the underlying shares itself. MSTY does not hold the underlying stock, MSTR. Instead, it is a synthetic covered call, but that is going to help with the high distribution yield. The ULTY is going to be a great option for those who want that weekly income, while MSTY is going to provide you those big, juicy monthly payments. But because both of these ETFs utilize an option strategy, you're going to have limited upside potential. So if the underlying stocks rise above the strikes that this fund manager sells it on, your gains are limited. And we've seen this with MSTY ever since it had that big spike in December. It dropped, MSTR recovered in price, but MSTY has not recovered in price following MSTR because of those synthetic covered calls, and you're mainly investing in these ETFs for the income anyway, not much for the share appreciation. But we do want the NAV to remain stable so we can continue collecting our dividend payments. So in my opinion, it is great to split your allocations between MSTY and ULTY. ULTY is going to be a little bit more stable and you're going to get frequent payments. MSTY is going to be for high risk, but also higher focused yielding. And we do have to take into account that both of these ETFs are going to have tax implications. Distributions are taxed as ordinary income. So make sure you set aside cash that you're receiving from these distributions and make sure you pay those taxes when tax season comes around. One strategy we like to do is actually set aside some of the cash into a treasury bond ETF such as SGov, which is going to be a very safe place to park your cash, and it has a dividend yield of over 4%, and it's actually very tax efficient, more than a high yield savings because you're exempt from state taxes. And that is because your holdings are going to be treasury bills, and interest gained from treasury bills are not going to be taxed at the state level. So that's going to be it for this video. It's a great strategy to combine ULTY with MSTY. These are both different ETFs. One strategy is not better than the other, and it's always great to diversify your investments to make sure you're safe and have reliable income.